Hi, this is Mac with PriceActionTradingSystem.com, and this is our chart lesson for Monday, May the 7th. And um, I got a couple of different emails today, people saying it was a difficult day, and I can understand why, because it started off really looked strong looking. It looked like it was going to be another one of those trends like we had the other day, and I imagine most people missed this original entry here at the open, and so they were waiting on the first pullback, and they probably got fooled right in here if you didn't have your trend line drawn right, and you could have got fooled right there. And I could see how you probably got fooled, and this just about the time you finally think it's time to go um, long, short again, then it takes off and goes up, and then it reverses. And basically all we did was we started off real strong, and then we went into a trading range. And here's your trading range right across here. And then about lunchtime, we tried to break out, thinking, if you were probably looking for a measured leg, I know I was, you can't get hung up on that if you don't get a measured leg and let that get you. But I was looking for a leg like that right there, and you see that puts prices way up here, and we didn't even get close to that. But you can see how much more angled this trend is than this trend was, and that's one clue that I mean, there it is again. You see how strong that trend is, and this is basically a two-legged correction, and then we got the next trend starting up, but it just didn't hold out. It just wasn't nearly as strong as this, and it did not hold up, and people were selling this all across up here. But of course we had all this resistance across here, and that's where we're still getting resistance from right in here and all across, right across this area right in here. So and one thing I could tell you, this was a gap open right here, and those gaps almost always get filled, and that's what this was. We were filling that gap, and not only did we fill it, we went a little bit higher, and we had the break. Here's your trend line. We had the break of the trend line. We had a run to a high that made a double top. And this is really just a two-legged correction. Here's your first leg, and then there's a two-legged correction in the middle, and then there's your second leg. And if you measure these, they're probably very, very close. There's leg one, and there's leg two, and you can see they're real, real close. Those just a two-legged move, and then there's your next leg starting out. But you can see how much flatter this was more of a more natural trend. It's just a trend channel than this. This is really too steep right here, and you see how long we were away from the EMA, really from 4 o'clock in the morning till about 8:45 in the later in the morning, and so that's too steep a trend, and it's not going to last forever. We don't want to try to guess when it's going to quit or be playing around with it, but it's not going to last forever, and you're going to get a correction and then more of a more natural trend. And we may continue higher from here after this break, but we'll just have to see. But let's talk about the trades. Back out where we can see this a little better. And this was really the first and only setup for right out of the gate. We had this little overlapping matching bars here. We had a little tick lower, and then we had this nice bullish bar right here. But the only way to really know this was a good entry was if you had your trend line right. And if you drew your trend line off those first two swings, you should have seen this. And still it was iffy because we weren't back to the EMA. But sometimes when you're in these strong trends, you don't come back from the EMA for a while. So you have to be able to talk yourself through that. And this was a really difficult entry here because it's all these overlapping bars. And most of you probably missed it. And then you're watching prices go higher and higher, and you're thinking, I'm missing out, I'm missing out, I'm missing out. And you probably went along somewhere right in here just as it reversed. And then you're thinking all short, and then you go short right in here, and then it reverses on you, and by this time you're chopped all to pieces. And I'll be shocked if some of you don't say that's exactly what happened to you. And I know because I've been there before. The reason I know that the reason I know that is I've done it before myself. I've been there, done that, and it's a hard habit you got to convince yourself not to get caught up in the emotions of what's going on. Just watch it, and whatever it's doing, you got to go with it. And um, there was never a long entry here, so no reason to be getting long in here. And if you got long right here, there was plenty of room to scalp out. So if you traded this properly, you should have been okay. It's if you start feeling like you're missing out and you got to get in, that's where you make your mistake. And but there was no reason to be thinking short anywhere up through here because the trend is up and there's no trend line break. You got to draw those trend lines. And if you'd have done that, even if you didn't enter along here, you wouldn't have been trying to get short anywhere up here because there's no reason to be getting short. And um, you had a trap right here on a little two-legged pullback, but we weren't back to the EMA. And you might have went long right here, and I could see why you would do that, but it really is still not a real good entry because there's two overlapping bars. They're both dojis. It wasn't really clear what was going on yet. And if you did enter here, your stop should have been right under here, so you shouldn't have lost much. But when we broke lower here in reverse, there's the entry. And there you got your trap. And so there's your entry right there. It's a nice reversal bar after it got a lot of people trapped to the short side right down through here. No reason to be going short for certain. Well, you know, you're going to be looking for a long right in here. And the worst that might have happened was you went long right here, and I can see how you could get trapped into that, and because it's real tempting to go long there. But it's not a real good setup, even though this has kind of a bullish bar. But if you did get trapped here, it happens to anybody. When you saw this thing close like this right here, if you weren't holding your 2-point stop, which I don't think I would have been doing if I was trapped to the short side here, I would have exited definitely right below this by 2 ticks. So the worst you would have done was lose a point or so. Don't take a full stop on something like that. But when you saw this reverse and this nice reverse bearish bullish reversal bar, after that one little tick lower below this really bearish bar, that's a great trap. So going long right there was the trade, I should say, and that was an easy move back up. And that was all we got out of it was the scalp, because if you held your runner, they got stopped out. But you got another chance to enter right here. All it was good for was another scalp, and then prices came back down. And once you start breaking lower, you want a second entry before you try to enter long. At least you should. At least you want to get further away so there's enough room to scalp out. So going long right here was really not that good, because by this time you've got 1, 2, 3, 4, 5, 4 or 5 overlapping bars, and you can see prices came back. But when they came back and it made a double bottom right here, hopefully you can see that double bottom right there. When we made a double bottom across there, going long right here was a good trade, and that took you off. And any runners right here were actually safe by a tick or so, and so you could have got some points out of this move right here if you were brave enough to stay with it. So but even if you missed that, there was another chance right here. Once we broke back inside the channel, prices pulled back, the channel held as support, and that's what you're looking for, and turned higher. So going long right there was a good trade. And then of course you're thinking, I'm riding that all the way back to the top. And when you start to get all this overlap right here, that's a good clue that you probably ought to exit, because prices are struggling to go higher. And so I would have exited right here if you were in this trade, and I did exit right here, and then I was done for the day. I didn't take any of these additional trades here. And but here's another. This is just a repeat pattern of this. You had these lows right across here, and prices broke lower just like they did here below these lows, and then tried it again. If you see that, this pattern right here is a perfect repeat pattern of that. So going long right there was okay. And while it was only good for a scalp or so, it was still a good trade. And if you did give your runners a little room, you could have ridden them for several points. But that was another good entry right there. But here's your trading range right here. Your support's down here, your resistance right here, and you had this failed break lower. And so that's a great trade. And all these trades across the support area were good trades. And then you had your trend line right here. Not only did you have this repeat pattern, you had the trend line, you had the EMA, and this is a two-legged pull back to the EMA and trend line. So that's another reason to enter long right there. And it is a second entry long coming off this new low. So several different reasons to go long there. It took a little bit to work through this high here. If you didn't take this one, no big deal, because I can understand why you wouldn't take it. It's close to here, so it is a little risky, but it worked. And if you took it, there were enough reasons to go long right there. And then notice that pattern again right here. All these overlapping bars, prices break lower. They test it twice, reverse on their high. That's a repeat pattern. It's the third time you saw that pattern in a row. And I always talk about that. When you see repeat patterns, if they work once, you better take them the next time, because they usually work over. Whatever works once during the day generally will repeat itself and work again. Sometimes they're real easy to spot too. And these all look exactly alike. Look how similar they all look. And so going long right there was good, and that was good for another scalp. And no runners, but good for another scalp. And that's why I always scalp out, because there's no guarantees that you're going to get more than 4 or 5 ticks. And if you do, then you got a runner in place, and you'll make money on that runner. And there was nothing wrong with this entry here. This is a breakout pullback long. I didn't mark it, but there was nothing wrong with that trade. If you took it, it's a good long, and it would have worked. But at this point, it's better to wait on second entries, and it was not a second entry, but sometimes on a breakout pullback, you don't get a second entry. So if you spotted that and took it, nothing wrong with that trade. It was a little risky because we're up here at these highs, and we're not really taking off like you would expect. And you can see it wasn't long before prices started selling off. So this was a good clue when it was overlapping and couldn't really go higher and sustain any movement. It was pretty clear that we were probably going to roll over here, and that's exactly what happened. So, but anyway, that was pretty much it for the day. It was really all longs except for this short off this double top after the trend line break. And your entry, somebody asked me about the entries. It's not clear why I enter. I always enter above, it's one tick, it's on a stop, one tick above the bar that I circle. And of course there's several bars in here, but it's usually the trend bar in the direction. And here's your, as you see here, here's your net, your trend bar in the short direction. So you're going to go short one tick below that. Down here, it's this bar, one tick above it. On this bar, it was above the second entry, so you know it's above this bar right here, again, on a stop. It's above this bar, above this bar, above this bar. And again, every one of these 3 trades are just a repeat pattern. And then I can't remember if I talked about this when it was above that bar. So it's always one tick above the signal bar. And I usually show the signal bar. And so if I mention the signal bar, my entry point is one tick above, on a stop, one tick above that bar. And if for some reason the move takes off real quick, say right here, say prices broke up one tick and then all of a sudden took off, what I'll do is I'll just drop a limit order in there, just like so. Just do a buy limit order, boom, right there, and drop it in and hope prices come back and get you. And usually they will. And if you think and sometimes I'll even drop it way back down here. You're starting to get risky by doing that, because it may not come back and get you and you miss the move, but that's always a possibility. And usually what I'll do is I'll pick somewhere where normally you would be entering on a stop right here. If prices move too quick for you, then you just drop in here with the limit order right here, and you might get a tick, and you might even drop it one more back, and you might get 2 ticks better. So then you got more room to scalp out. And if there's not enough room, let's say you're entering right here, and the entry's going, or let's find a better one, like right here. See, entering right here on a stop, one tick above that bar, does not leave you a lot of room to scalp out. So what you might do is come down here a tick or so lower and drop a limit order, and so prices tick up and then pull back and stop you in. And they would have right here. You wouldn't have got entered before it went higher, but it came back right here, and you probably would have got stopped in right here, and then your runners would have been good too, and boom, it's off to the races. So don't forget that. I mean, people ask me that, well, how did you didn't have time, the prices took off. But yeah, sometimes you do have time, and sometimes you don't, and you just miss the trade. It's just simple as that. Better to miss a trade than chase one and catch it up here too late, and then it sell right off and stop you out. So don't chase the market. That's one thing I don't recommend. If you miss the trade, drop your limit order in there and hope it comes back and gets you. And if it doesn't, then you just miss the trade. And that's, it's unfortunate. But there'll be another one along shortly, because that's what gets people trapped. When this thing's steadily going higher and you're watching it and you're thinking, I'm missing out, it's going to go without me. And then you enter right here long and you enter right at the high, then you're stuck and you're going to get stopped out. So do not chase the market. Hopefully that makes sense to you. And I guarantee you, some of you could write me today and say, yep, that's exactly what happened to me. I didn't take the one entry, so I watched all this, and then I couldn't take it anymore and decided to enter, and that's right where I entered, right at the high. And that's what happened here, is suddenly all these weak traders are deciding to enter long, and the smart guys use all those entries to exit, and the market sells off. And then they run it up again when enough of them have gotten out, and then they say, okay, we've had a big enough pullback, it's at the EMA, and we've got a short trap here, and so then they run it up again. And then the rest of them exit out, and then they're all gone, and then we have a correction. And that's what the rest of this is it's just waiting, kind of building momentum again until it can break higher. And so don't chase the market. But anyway, I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com. We'll see you tomorrow.